Welcome to TheoTrade. This is Don Kaufman. Here we are, March 14th, 2016. The Theo Night video, today's trading session, a rather tight trading range, and that is what we term an inside day. What that ultimately means is if you look at the S&P futures, or if you're more used to, looking at the SPX, maybe the spiders, the trading range itself really tightened up today. Specific to the SPX, we only had like a 12-point trading range. Again, we say it's an inside day, very, very tight, very narrow trading range, not a huge amount of action in there. If you look at the volume throughout the markets, it's light. Apparently, the markets are waiting for something. Again, all last week, the week before that, I kept saying the markets are looking for a catalyst. So without having to go into too much detail about individual stocks today, because again, the S&Ps, what are they? Massively unchanged on the trading day. Well, they still have 1 minute and 36 seconds to go, right? Anything can happen out there, but it doesn't look like a lot is going to happen. So we have a day where we pause, we reflect on the positions we currently have. More importantly, dig into a couple of positions here and a few trades that I'm looking at. Number one, Google. I mentioned this in the kind of the weekly review video that came out this past weekend, and that was specifically to Google. So I was looking for a short entry into Google. If you're still looking for the trade, it's there for you. Okay, I'd come out to the April expiration. Now, one thing I do want to warn you, before I'm going to even build this trade, I want to make it very clear the trade itself is going to be bearish. Now, many of you, if you've been following some of the trades, I've got a bearish trade on Facebook, and I've got a bearish trade in Apple, and I've got a bearish trade on Amazon. I've got a lot of bearish trades. You don't want to pile on. If you don't want another bearish trade, if you're not comfortable with the risk, don't play the game. This kind of a trade, all we're going to do out there is we're going to go out and we're going to buy a $5 wide spread, and I'm going to do it about 32 days out. See, different bearish trades is fine so long as I'm distributing those trades into multiple expirations, which is exactly what I've done in this case. So here's a 755, 750. Now you got to love the way this thing prices at about 235, because the 755 puts, they're already in the money by about $4 and 70 cents. So the trade is intrinsically worth, and there's the bell, the trade is intrinsically worth more than you're paying for it. So what do? We just go out, hit confirm and send, fire it off. Again, we like these kind of quintessential risk 250 to make 250 types of trades. And in this one, you go out there and you risk, let's call it $2.50. Okay, I know the mid price here is $2.25, but you risk maybe, $2.50. You try to make about 60%, okay, of that $2.50 on the trade and just exit. There is no stop orders, nothing of the kind. So that's a bearish position inside of Google. If you don't mind, again, a little bit more bearish or downside exposure. Recall, again, I've got trades in Amazon, I've got trades in Apple, I've got trades in Facebook over there, but they're in various time frames out there, so keep it in mind. One other one that is a little bit off the beaten path today happens to be inside of Target. Now, this isn't a trade. Now, for those of you that have been following me for a while here at TheoTrade, I trade in 3 distinct time frames. And this is stuff that we do inside of our chat room, inside of our classes, and our coaching sessions. Every single day we discuss this. I trade in 3 distinct time periods. Number 1, I do intraday trading. Sometimes that can be in futures. Sometimes I'll go ahead and scalp options on an intraday basis. Once in a while, I'll just sling some stock. Just the other day, again, I traded some NASDAQ, all right, some Qs. Today, I traded a little spiders intraday. I actually traded some Q options intraday today. All right, number 2, what I go out and do. All right, so that's the intraday stuff. Number 2, I trade in the shorter duration, and that happens to be spreads like I just did in Google. I say shorter duration. That's anywhere from weeks on out to about 2 to 3 months, okay, what we'll term kind of that mid-duration. Last but not least, okay, I build duration positions, and these are what I kind of call my investments to the downside. In some cases, they're investments to the upside, but in the case of Target, I'm actually building a short position inside of Target. Now, I've had a short position existing in Target for some time, and I'm just building it up a little bit more today. My net exposure, I want to be short 500 shares, which you see here. Okay, I'm going to go ahead and I'm going to be shorting at least another 200 shares. I can take up to about 1,000 short shares of risk inside a Target. But what am I basing this on? Well, again, I've carried positions in Target for quite some time. Target's had a pretty explosive move, and this is going from, again, its earnings announcement in early February to right now. It looks like Target's getting ready to roll. The move to the upside has been nothing short of phenomenal. Now, the last time that I shorted Target, it was right in this exact same neighborhood. In fact, taking a look at some of my short positions in Target, you'll actually see average price, okay? But I had shorted Target in the past right in the neighborhood, again, of about $80. Most of my Target I covered down in the 60 handle. Specifically, I actually covered Target down in the 69 range, okay? I allowed 200 shares to sit on there. I'm actually rebuilding this position. I want to make this clear. This is a duration position. That means I am expecting to hold it for periods upwards of 3 months of time. It's a minimum, again, of 3 months of time. I'll hold a position like this 6 months, 9 months, and I will sell option premium against it. So I want to make that clear. You can't do this inside of an IRA. If you do, yeah, well, it's kind of special because you'd be short shares, and you can't short shares inside of the IRA. So if you're going to be in an IRA, you'd have to go out there and do some type of a option replacement. In any case, again, I'm going to be building net. I'll be short anywhere from 700 shares to 1,000 shares over the next day or two, rebuilding a pretty substantial short position inside of Target. I think it's fairly advantageous, not too far off where I shorted it the first time. With that, okay, we've got a couple of major announcements coming out later this week. The markets here, again, where do they finish? Unchanged on the trading day. Not a whole lot went on. The bonds, relatively unchanged. Volatility, nothing. What do we got across the board? A whole lot of nothing. We sit, we wait, okay, for what? The FOMC, okay, there's Bank of England notes coming out. There's all kinds of stuff later in the week over there. Stay tuned. Much more to come here at TheoTrade. Have a great afternoon. Bye-bye.